Hi, Kelly Eckholt here to update you with the key events of the week. And today I thought I might talk to you a little bit about the general messages of the economy that came from our own economic overview released last week, but also the view of the economy that the Reserve Bank gave us this week with their monetary policy statement. In general, everybody seems to see that the economy is going to go into a period of below trend and indeed very low to zero growth over the balance of this year. There may be some kind of recovery towards the second half of next year, with the interest rate sensitive sectors being the ones that are going to be the weakest. So think about retail, trade and construction in particular are being areas of the economy that are going to be weak, really labouring against those really significant interest rate rises that have occurred over the course of the last couple of years. But that's not to say that everything is going to be like negative. I mean, we do have some signs of strength basically coming through in the housing market in particular. Both the Reserve Bank and ourselves revised up our house price forecasts over the last couple of weeks. The labour market remains fairly strong, and also the services sector continues to be quite strong as well, as people continue to consume services and experiences that they missed out on during that COVID period. I guess a key risk looking forward that everyone is increasingly focused on is the increasing weakness in the agricultural sector. In particular, weakness in Chinese demand is being translated into weaker prices for the agricultural commodities that we sell, and everybody's looking pretty closely to see how that translates to broader economic growth over the period ahead. Everybody still sees that inflation pressures are quite elevated and persistent, and that was a key reason why the Reserve Bank shifted tack and now sees a 40% chance of a 25 basis point increase in interest rates over the course of the next 6 months or so. And importantly, they see that there's little chance of a rate cut before the end of next year or even the start of the year after next. That pretty much brings them into line with Westpac's long-held view that there was going to be more work to do before you could be sure that inflation would return to target. I'll talk to you again next week.